spoken a lot about crypto, but it has crept into a lot of our conversations here. So we are reading a lot about it. We're writing about it. Maybe you could talk about DeFi, define what it is, and sort of where you think we are in the evolution of financial services.
So DeFi is an acronym for decentralized finance, which is sort of an umbrella term for traditional financial services activities that are done on a public blockchain without an intermediary. So if you think about getting a loan or a brokerage account or an exchange where there's a third party involved, decentralized finance essentially takes that third party out of the equation, and the activity is a peer-to-peer activity, and it's really governed by what we call a smart contract, which is in its own right an operating system. And so why is this cool, or why is this important? Well, as you know, and I'm sure we'll get into this a little bit, banking hasn't worked for everyone in the world. And you've had numerous guests on who've talked about the underbanked, the unbanked, or freelancers or emerging demographic who don't, fit the traditional sort of W-2 salaried person. And what's happened is because of this friction in the banking industry, there's been, these individuals, and a lot of them are very comfortable with technology. They're very comfortable with risk-taking in digital assets, and they're looking to grow their wealth just like any other person. And these opportunities have arisen. As far as the market itself, it's exploding. There's one measure of value that I like to look at. It's called TVL, which is basically total value locked, which is really measuring the dollar amount in a smart contract. Right now, that's around 250 billion.
Wow!
But what's interesting is it's grown about 1,000% in the last 6 months.
Wow!
So not something to be taken lightly anymore.
No, that market size or total locked value is definitely reckoning. It deserves reckoning. Dave, you just started talking about the traditional banking world not necessarily working for everyone. So maybe we can talk about how DeFi addresses the underbanked and unbanked.
So if you think about a traditional financial institution, there's a lot of people in the world that don't have access to the physical banking infrastructure. They might live in a region where there just isn't a bank, or they don't have the proper documentation to open an account, or as we just talked about and some of your guests have alluded to, the underbanked are individuals who earn money in a non-traditional way, and they want access to loans, they want access to credit lines. We joke all the time. I'd be like, what would a banker's face look like if someone walked into his office and he had 1 million followers on TikTok and he wanted a credit line? Like, what would be their reaction? Would he be embraced, or he or she be embraced?
Or just
so this is the emerging world, and I think that your last guest talked about freelancers and access to liquidity. There's a whole emerging demographic, whether it be the gig economy or the creator economy, this idea of micropayments and how to be compensated for creation, whether it be in art or music or writing an article. And there should be a system that's underpinned to be able to compensate them for their efforts. And right now in traditional banking, there isn't. And so, that's why blockchain protocols like the Ethereum-based decentralized finance protocols that are emerging are becoming really exciting, because they're addressing these issues, they're addressing these problems, and they're giving access to these people who have been locked out of the financial industry, an opportunity to come into the industry with very little friction.
Totally. And I think one of the takeaways I have from the whole conference is that I want to be a TikTok influencer. That's a job I want. So what you're talking about a lot with DeFi, the decentralization, really it impacts the role of banks and financial institutions, because they've acted as some type of intermediary. And I know Publicis Sapient, you work very closely with a lot of the world's biggest financial institutions. Are they thinking about DeFi yet? And how are they thinking about it if they are?
So I think they're thinking about it. I think they're definitely thinking about crypto for sure. And we've seen a lot of activity by banks staffing up crypto trading desks. There also, there's been some public announcements by some banks around providing custody services, providing probably some sort of wallet service or private key service. So those are the start. That's actually a positive. That's a positive, action in my mind, because at least they're not putting their head in the sand. They're
Right.
acknowledging that this is going on, and
that seems like a stage you have to get through to move on to DeFi, right? Yeah.
Totally. Yeah. Absolutely. And so I think they will. They're being cautious because they are very regulated, and I think what will be important is for them to reach out to these institutions that are currently operating DeFi businesses, and collaborate with them. Acknowledge that they're here, and that they could provide some interesting services for not only maybe existing bank clients, but also for new clients, and then work in collaboration with regulators to create investor protections that work for everyone. And I think that would be very cool, because it will unlock so much more in banking. Banking, there's a lot of opportunity for banking. Like, I know people say, well, DeFi is going to disintermediate banks. I'm not so sure it will, because what's happening with the current group of players in decentralized finance, maybe not so much decentralized finance, but in the centralized exchanges, there's definitely a need for banks to sort of govern what's going on, because you've had some exchanges go down, keys get lost, people have lost money. They don't lose money on the protocol itself. Blockchain has never been hacked. I want to get that out there for people that have that notion that, oh, it's hackable. Blockchain has never been hacked. Exchanges have been hacked, but blockchain's never been hacked. But if you had banks come into to governing exchanges or working with crypto exchanges, then I think it would create so much more validation of those products, and again, it will. And there's lots of opportunity for banks. There's security and risk management opportunities and services that they'll be able to charge. There's verification opportunities. It'll actually unlock a lot more services than they think, if they're willing to be open to what's going on.
Right. It sounds to me like what you're really describing is that there aren't necessarily two distinct or separate worlds, but that there is this middle ground, this bridge between the two, the old and the new, that banks can play a role in. You started to allude to actually my next question. Where do you think the opportunities are for FIs to participate in DeFi? Maybe we could talk a little bit about that more in depth. Yeah.
So definitely with what I would call digital currency. So it could start with stable coins. Stable coins are so stable coins essentially mimic a dollar. So you have all different types of stable coins, but for example, USDC, which is a stable coin that's issued by Circle, or even by the Federal Reserve, who's looking into their own stable coin. It's a one-for-one. It's underpinned by fiat currency, whether it be a dollar, whether it be a pound, or euro, whatever. You can transfer back and forth. You can go into a stable coin. You can go back to fiat. So there's really not a lot of risk with stable coins. And what's good about stable coins is it reduces some of the immediate friction that we see with the current banking system. One area that comes to mind immediately is cross-border payments. So Oliver Wyman did a study where stable coins would save corporations over $100 billion in cross-border payment expenses, and from, you think about long settlement times, lack of transparency, and of course high fees.
Right.
So just right away, just in stable coins alone, moving money around would enhance FI's client base, and would also get the mainstream public a little bit more comfortable with the idea of using digital dollars.
Mm-hmm.
Because at the end of the day, if you think about it, everybody's getting comfortable with digital experiences in general. You have the metaverse out there right now, and what's interesting about the metaverse, which I also think should be decentralized, not Facebook dominated, but if you think about the fact, if we could just sort of riff for a second, you could essentially be on your couch but be participating in a concert somewhere, right? And it could feel like you're really at the concert while you're on your couch, or you could be on a piece of land that you've digitally bought, and it will actually put you in that world. Decentralized finance is going to have will play a part in that world if that world really does get adopted in a grander scale.
I get that. It's a very interesting view towards the future. So what will it take for FIs, I guess, to embrace DeFi? Or it sounds like they need to crawl before they run. What do they need to do to move forward?
Well, one thing they are starting to. So, I mean, not to put a plug in for us, but we're working with a bank in Asia to help them. They've taken a position in a centralized crypto exchange, and so we're working with them and helping them to not just do their due diligence on vetting the exchange itself, so it's fit for purpose for a wider client base. But I also think that you're seeing opportunity now where banks, besides staffing up their currency desks, they are starting to do business activities that involve decentralized activities. For example, Goldman Sachs just did a digital bond offering in Europe about 6 months ago in partnership with SocGen and Santander. And it was all done on blockchain. And what's interesting is that if you look at the way securities might be distributed in the future, this is a tremendous protocol to use because you reduce counterparty risk. It's open, it's flexible, it's fast, and it's transparent. So there's nothing. It's immutable. Everything's on the chain.
I guess can banks get there themselves? I guess another way of asking that: what role will partnerships play in the future of financial services?
It won't work without partnerships, I think. If you think about what banks are doing with fintech right now, so it goes through stages of evolution, right? So the first stage is adversarial, and then they circle each other, and now you're seeing where banks are partnering with fintech, right? So banks are there's numerous stories that you write about all the time where banks are partnering with fintech. And that's important, right? Because they both bring different characteristics to the financial ecosystem that makes it better and less frictionless for clients, which will be good in the future. I mean, banks have brand and they have trust, which is super important when you're trying to grow a market. I don't care what market it is. Fintech brings innovation and they bring that startup mindset, which is something that sometimes banks have lacked in the past. So by having them partner together, they're going to create a much better protocol, a much better system where everyone can participate and feel like they're not being disadvantaged within the financial ecosystem.
Got it. I want to double click on the partnership question. What do FIs need to understand about fintechs to make these partnerships work? And what about vice versa? What do fintechs need to understand about FIs?
So for me, I think that, first off, for partnerships to work, you have to acknowledge the other one and say, all right, this business is here to stay. All right. This isn't just a fad. This is something that's happening. This is something our clients are asking for. This is solving problems. It's a better system in some regards. I'm not saying everything. It's still a very we're still very early in the cycle, but there's the potential for it to be incredible. Maybe what they need is what banks can provide, which is experience, as we talked about, this idea of trust, banks' positions with regulators. I mean, one of the things that is really important for this market to evolve would be banks and regulators and the crypto community getting together and collaborating on regulation that not just gives investor protection, but also allows for new regulation. So if you think about it, like it's like 20 years ago that you couldn't even open a checking account online, right? So regulators evolve too. Mm-hmm. And I think that's where the importance comes in, is they got to be able to acknowledge each other and realize that they're all of them are here to stay. And to do that, it requires, I think it will happen. It's going to happen anyway, because banks' customers are asking for it to happen. So at the end of the day, they can't ignore the fact that if they're not going to provide these services, or if they're not going to collaborate, then their clients, whether they be institutional clients or the retail, will move on to these platforms over time, and then you will see some disintermediation, which for me it would be better. It's kind of like it's better if they collaborate together.
Totally. Dave, you said something about trust. I just want to come back to that. Can we talk about the role of trust in financial services and maybe how that might influence these types of collaborations in the future?
Yeah. Well, I think first of all, banks have to understand that, I said this before, that there's a group of very technically savvy young people that are very comfortable working with digital assets, right? And we've seen, and they have to get over the fact that they cannot patronize this demographic, right? We've already seen like Reddit and Wall Street Bets, where these hedge fund guys wanted to stick their chests out, and like, these people don't know what they don't know what they're doing, and then they got run over. Banks have certainly not got it right all the time. You can just look back to 2008. So this idea of them patronizing and saying, well, investing's hard, and you should leave it to us. That's something we should park, and then just embrace the fact that if we create platforms, if we create protocols that really encourage innovation, then how can that be a bad thing, right? I mean, at the end of the day, that rising tide will lift all boats. And I think that's what you're seeing. DeFi disrupt markets because it's at the center of innovation. And at the end of the day, that's what drives markets. And we've seen that with the internet. We've seen that. We talked about this before. We joked about it. I mean, if you would ask somebody in 1995 that phone calls are going to be free, people would have looked at you with like 10 heads. Like that's not going to happen. And now here we are. Fast forward and it's all here. And the same thing's going to happen, where this democratization of finance is going to happen regardless. And so why not do it so that it works for everyone and unlocks that the power that could be there, and done with the right investor protection.
Totally. And I guess looking towards the future, what does DeFi say about the role of financial institutions as we look out into the future?
Well, I think they can embrace it, and then they can if they embrace it and collaborate, then they can actually be the flag bearer for these new for evolving as institutions. It's funny, we work, our strategy is to leverage emerging technologies to help banks transform themselves so they can unlock enterprise value and be competitive in the future. So in a lot of ways, what they do now is things that keep us in business, because they're moving, they need to do that essentially. So for me, I think if they don't do that, then they do risk playing a lesser role in the financial ecosystem of the future. I do believe that. Now, will it be Bitcoin versus some other currency? I'm not going to make a prediction on that, but I do think that blockchain technology, Ethereum-based public blockchains are here to stay. And I think the most important thing would be for banks to work with DeFi to create a convergence where you have the legacy sort of financial global finance converging with the digital world and creating a protocol that will really unlock the power of finance that everyone can participate in. And think about it. That's going to grow a user base that's right now, is being locked up.
It's interesting, as you were talking about the work that you do with banks, I started thinking like you're working on digital transformation with a lot of these institutions. It's almost like you might skip a cycle now to get it to DeFi, right? They're still working on catching up with like sort of internet and modern internet protocols, right?
They are. And I think that, but you know what? That's fine. To me, as I said, we are working with some clients who are working on crypto and DeFi initiatives. It would, for me, if Publicis Sapient can play a role as the Magic Johnson of assisting and helping grow these protocols or helping these two business entities come together, I'm all for it. I think it would be great because I do think when you look at banking in general and why is it that on a traditional banking account you can only get you can't even get 1 point of interest, but you can go stake coin and get 5% interest on a DeFi protocol. So you don't need, I don't need, for me to open up, for me to stake coin. So here's a funny thing. I'm going to give you an example. I did an NFT the other day. It took me 6 minutes. I timed it. I did 6 minutes to create an NFT.
Wow.
Created an NFT on my mobile phone. I created a wallet, bought some Ethereum because I had to buy some Ethereum for gas fees and transaction fees. I went over to Reliable, which is a NFT marketplace that has collectibles, but also you can go and mint an NFT. And I minted an NFT in 6 minutes. I also was able to have access to a bunch of currency trading, which right now, the naysayers will say, well, it's kind of gamification and it's Wild West. And, maybe some aspects of it is, but then that's the opportunity for banks to come in and be, I don't want to say be the adult in the room because that would be patronizing, the work that these DeFi institutions have done. But what it will do will lend credibility and trust, which at the end of the day will create more adoption. And markets are only as good as people coming in and the users, increase. That's what makes markets.
Dave, it's always fascinating to talk to you. Appreciate you joining us at the Big Bank Theory and appreciate your and Publicis Sapient support of Tearsheet.
Thank you very much. Thanks, Zach. It was great to talk to you, and it's been a great conference. Learned a lot about a lot of great companies, and appreciate all that you do.